Welcome to Breaking Banks. Welcome back to Breaking Banks, the #1 global fintech podcast and radio show. I am your host, Brett King, and with me in the hosting chair today, co-hosting, is JP Nicols.
Yes, hello.
Yeah,
No H, that's right.
How are you?
I'm doing okay. Ready for this lockdown to end, but we can't. So here we are.
Well, they're talking about the third wave coming now, right, in the US. So,
well, this is really just an expansion of the first wave.
Right.
So although we've
That's
been doing okay here in Washington, our friends in the Midwest are getting hit pretty hard. And we're going to talk about Europe today, and we're seeing a second wave hitting large parts of Europe as well.
And when you say Washington, of course, Washington State.
Correct.
So, well, great to have you on. Joining us all the way from Luxembourg today is someone who's been on the show before and is a good friend and contact in, a network powerhouse in the Luxembourg and European fintech space. Nasir Zubairi, is that right? The pronunciation of your family
It's
name?
good enough, Brett. It's fine. Thank you. I've dealt with this for 45 years. It's fine. Anything is acceptable, pretty much.
And you are currently the CEO of the Loft, which is the Luxembourg House of Fintech. So tell me about Loft, because I know we've had you guys on the show before, but for those that didn't catch that, what does the Luxembourg House of Financial Technology do?
Yeah, sure. Thanks, Brett. So we are quite unique in terms of our role here in Luxembourg, and I think unique as a structure internationally as well, in that we are a genuine collaboration between the public and the private sector to ensure the future competitiveness of Luxembourg's financial services industry with a focus on digitalization. Obviously, given the foundation of your work, you understand how critical that is to financial services going forward. And in that sense, it's not just talk. It is actual genuine collaboration. The Minister of Finance of Luxembourg, Pierre Gremenier, is our chairman, a very, very proactive chairman on our behalf. And the private sector really are working hand in hand with the public sector to promote and to develop the digital capacity of the Luxembourg financial services arena. So
now,
really our role, as a center point for all that.
When we talk about fintech and the growth of fintech, obviously, when most fintechs start, the startups that are emerging for fintech, most of them are SMEs, small businesses, until they get the first couple of rounds of funding out of the way, typically. And so what's it like getting a small business set up in Luxembourg?
Well, it's relatively straightforward, and part of our role therein is to act as a chaperone, act as a point of support, to hold their hand and to lead them through the process, to make sure that they have the right contacts, and to get up and running in the most effective way they can. But that's not just the sort of logistical and business support, but also community support. Luxembourg is an incredibly international country. I mean, over 50% of the population are foreigners. A lot of the businesses that come to set up in Luxembourg are coming from abroad. And, when you come to a new country, it's not just about getting up and running and understanding the bureaucracy. It's also about getting comfortable yourself and your team comfortable. Often firms are bringing in people from their existing operations, wherever they may be. And we build a sense of community so that they also feel comfortable and happy within Luxembourg and want to be here and enjoy doing business here. So,
do you find people coming in from other parts of Europe to Luxembourg because of the flexibility and because of the capital flows that go through the market?
Yes, of course. I mean, there's a variety of reasons why people choose to come to Luxembourg. One of those is its competence in international business. I mean, Luxembourg is 600,000 people. People do not come to Luxembourg to service the local market. They come here to service, I guess, firstly, the European market, and secondly, the international and global market. So, you know, we have a strong competence in enabling that to occur. So if there's a place in Europe where you truly can, you know, look to build a global business with the competences you need around that, you have that skill set here. But then critically alongside that is the language capacity. You know, I'm sitting here as a very proud Brit still in many ways. I don't speak a word of French or German, and I sit in the heart of Europe, and I do not have a problem. I call this place my home. It's fantastic, right? English, French, German, Luxembourgish, Portuguese, Spanish. I mean, you can find someone here that you can do business with in all of those languages, which also helps in developing your business across the European Union and dealing with the different cultures. So there are many strong points to doing business. And I guess the final pillar of that is in fintech is the closeness of the market, access to decision makers. We have 125 banks. We have the world's fund industry, increasingly the private equity industry, the cross-border insurance industry for Europe. And, you know, you go on a Saturday morning, you're going to bump into God knows how many CEOs shopping at your local grocery store. Everyone knows everyone, and you get access to them very, very easily. So your time to market, your sales cycle, tends to be a lot shorter here, because you know you can get access to the right people very easily.
Well, historically, your leadership in Luxembourg has been around asset management and assets under management and kind of global wealth. How's that been changing over the last few years, and especially since COVID? What kinds of things are you seeing, and what are you focused on lately?
Well, aside from a massive boost in digital transformation as a result of COVID, but I think that's been happening everywhere, and maybe we'll park that and come back to that in a second. I mean, what was really interesting, asset management, yes, has been the core of Luxembourg's business. Alongside that, for many years, private banking was also a huge sector, but had seen some level of decline in the past 5-6 years. What I'm told is that industry, private banking, had a huge boost during COVID. Because Luxembourg is seen as relatively secure, both politically, economically, and we saw massive asset inflows coming into Luxembourg from particularly high net worths and ultra high net worths, given the economic uncertainty in very many other countries, particularly across Europe. Where else, I wouldn't say anything specific to COVID, but more as a result of Brexit, has been a huge boost to the private equity and insurance sector as well, with the likes of, you know, AIG setting up their corporate business here to service Europe, and many, many private equity firms choosing Luxembourg as their European base. Yeah.
Now, how about there are a number of business interruption loan schemes that have been going on across Europe, and I think both the UK and the US have kind of struggled with their respective programs. Some countries have done better than others. What has Luxembourg's role been in that?
Well, in that, I mean, it's played a critical role as a country, given that we house the European Investment Bank and the European Investment Fund, which are largely orchestrating a lot of these recovery packages. So therein, there's been a big spotlight. I think with Luxembourg's finance industry and expertise, obviously the Pierre Gramegna, the Minister of Finance, as you may know, has twice been runner-up in the elections for the ECOFIN Council, which is basically the Council of Finance Ministers, and plays a pivotal role in that council regardless, given his length of tenure as a finance minister relative to others in Europe. So we do have large sway in that, and there's been some good case studies. I mean, looking around the world, there really probably hasn't been many places that have dealt with COVID as effectively as Luxembourg did. I mean, I don't want to rattle off all the processes and procedures here, but as a private citizen and as a business citizen, this country has really pulled out all stops to ensure that it's been handled in the most incredible way, really.
Well, maybe it is worth just highlighting one or two of those things, because I think so many areas have struggled with that. What was maybe the top one or two things that you felt Luxembourg did better than others?
Well, obviously the shining light is mass testing, right? Mm-hmm. Everyone gets tested. I've had 9 tests so far. You arrive at the airport, you're given a certificate to go and have a test. You can have the test done at the airport. All the cross-border commuters can get free tests in Luxembourg. I mean, it's of a scale that's unprecedented for a population. The population is small, but the medical capacity of Luxembourg obviously is relative to that population. So it's still a big initiative for Luxembourg to do that.
Right.
Alongside that is obviously the very, very agile way in which the government implemented support schemes for businesses, partial unemployment, chômage partiel, to basically cover wages for employees, bank guarantees so that firms could get access to capital from the retail banks within Luxembourg. Increased, I mean, more specifically and relevant for this conversation, increase the innovation investment capacity within Luxembourg as well. So be it that we do work under EU guidelines, as every country in the EU does, there are certain points of flexibility, and there are a variety of EU subsidy schemes that we obviously do administer and deliver to young startups or young innovative enterprises, as they're called. So they readjusted the ratios on those. Typically, it was sort of matched funding on a 50-50 basis. Now it's 70-30. So the government's really stepped up to try and help out and provide incentives and ensure the continuity of business and innovation within Luxembourg.
Now, with the potential of a hard Brexit coming, given what we've seen over the last couple of weeks, how have you gone about ensuring, do you have residency in Luxembourg now, or how are you dealing with it as a UK passport holder?
Well, I am resident. Technically, I can continue to be resident in Luxembourg, but yes, I am looking at some of my alternatives. I can apply for a Luxembourgish passport next year, which I'm contemplating. I am half Polish, so technically I should be able to get a Polish passport as well. But my Polish is not up to scratch really, and if there is a complex language, that truly is one. So, I mean, I do have very many options, but I'm not worried in the immediate aftermath of being suddenly ejected from the country. So.
No, I'm just wondering. No, I'm not. I don't expect that, but I'm just wondering if there's been I know Berlin saw some influx of startups, with the UK, Brexit. Has Luxembourg also seen, a bump in activity given the sort of change with the UK's positioning in the EU?
Absolutely. I mean, payment firms, obviously, it's more related to regulated entities. I mean, unregulated entities. I mean, the two focus areas within Luxembourg, given the traditional industry here and the competencies, have been payments and regtech, right? Regtech, yes, we've had some inflow, more because of the business opportunity as opposed to the necessity of Brexit. But with payments and regulated firms, yes, there's been a huge spike. Luxembourg has one of the, if not the sort of payment centers within Europe. That's traditional from being the first country to have implemented the PSD1 regulations way back, 2007, 2008, something like that, where we then saw the likes of Amazon Payments, PayPal, and others sort of flow into Luxembourg and set up their European headquarters here. So a lot of payment firms have applied for and been granted licenses to operate across Europe out of Luxembourg. What's been very shocking has been, in the past few months, finding and getting calls from UK businesses, and some of them decent size as well, who have suddenly realized that Brexit is happening, right? And are totally and utterly unprepared. We will see a number of payment firms that will no longer be able to operate come December 31st. It is very scary.
That's pretty crazy, right?
Yeah.
You know, that they leave it to the last minute, just hoping for a deal that lets them continue as a status quo. So, what is the makeup of sort of the business environment in Luxembourg? I know, you know, I've lived in Hong Kong, you know, which is the International Financial Center. Like over 95% of businesses are SMEs in Hong Kong. What's the mix in Luxembourg?
Not quite that extreme. It's around 2/3 of businesses are SMEs and SMBs in Luxembourg, and about the equivalent in terms of employment as well of the economy of people in the economy as well.
And how do you think? I mean, I know JP talked about the loans and so forth, but how have the small businesses in Luxembourg generally held up during COVID?
I mean, during COVID, yes.
I mean, it's been tough everywhere, right? But
it's been tough everywhere. Yes, okay, we haven't seen mass bankruptcies. Obviously, the sectors that has been hit hardest is Henrichs, hotels, restaurants, etc. Luxembourg has opened up relatively quickly after the confinement. I mean, the bars and restaurants, be it with rules, have been operating now for quite a number of months, be it not to the capacity that they could previously. Time will tell, Brett. I think, you know, just as with anything of this kind of nature, the impact to an economy is delayed in many ways, right? Because firms do find ways to meet short-term liquidity issues, but eventually those means run out, right? And that's when we'll start seeing problems. I mean, as I said, you know, the hotel sector, I mean, you know, hotels are lying empty just as they are in most places.
Certainly.
Right? So it's a problem, yeah? So time is going to tell. I mean, I think nobody's going to escape unscathed from this, yeah? And as a result, the banking sector is also going to be hit, even though in many ways some people are touting it as the savior for this crisis, as opposed to the villain, as it was last time round. But it'll be interesting to see how European banking will shape up in the next 4 or 5 years, given the potential debt crisis that is coming. Yeah.
Well, and part of that is credit gap on the side of those small and medium-sized enterprises across Europe. I mean, is there capital that you're deploying from within Luxembourg to help, or is there technology that you're using to help deliver that better or more efficiently?
Technology, not so much. I think that's being delivered and developed in each jurisdiction itself. Capital, obviously, yes. There's a lot of firms centralize their operations and particularly their debt books out of Luxembourg as well. There's a large corporate lending business here as well out of Luxembourg for the European Union. But it's not so much the debt that's being sent out today, because a lot of that debt is, let's face it, being backed by guarantees across, be it at EU level or a country level. It's more the issue is the loans that had been granted before COVID, which are not guaranteed in any way and are not being guaranteed.
Right.
And, you know, those, nobody anticipated COVID, obviously, and the problems that will arise. So there will be defaults. And when you're looking at the KPIs across the European banking sector, which are quite honestly appalling. Only Japan has worse KPIs in banking than the European Union. You're talking about average of 5.9% return on equity, 2% return on tangible equity. And
that's not sustainable.
That's not sustainable. And when you then look at maybe more specific ratios and KPIs, I always like to look at Texas ratio, which is the ratio of debt, non-performing loans to tangible equity. I mean, some countries, some banks en masse in, say, Italy are way over 100% already. Yes, that again is unsustainable, right? So there are going to be big changes in the.
Isn't it funny, because there's a lot of people talking about where's the business model for the fintechs? and how are they going to survive it? The neobanks, more so the challenges, right?
Yeah.
And yet we see exactly the same issues, fundamental issues emerging in banking currently because of low interest environment, net interest income, and so forth. This is why we need digitization of the financial services sector, obviously.
Yeah. And I mean, talking about the low interest rate environment, and another key factor that acts on this, on what I'm going to talk about in a second, is the increasing scrutiny and regulation around AML. I mean, European SMEs, and it is across Europe, are getting hit hard in their ability to open bank accounts generally, right? It's getting harder and harder for a small business to open a bank account within the European Union. Because firstly, a bank doesn't want deposits, doesn't want people to have bank accounts because of the cost of those bank accounts, but also because of increasing regulation on AML, which is making it harder for firms to acquire bank accounts because banks don't want to take any risk whatsoever. We see this quite sort of punitive issue, particularly within the crypto markets, right? I mean, if you do crypto assets anywhere in the European Union these days, I mean, good luck to you if you're trying to get a bank account. It's pretty damn tough. Yeah.
Well, and that's not going to go away, right? I mean, that not anytime soon, at least. That trend line is kind of heading in that same direction. And when you combine that with what you cited a few minutes ago, if the return on equity isn't above the cost of capital, just by definition, it's not sustainable. How does this resolve itself? Is it just more consolidation? I mean, how are you thinking about this as you look forward a few years?
Well, going back to something we talked about in the early part of the conversation, digital is critical because if anything, it can help lower costs and therefore help to at least provide manageable KPIs and profitability and margins for the traditional banking sector. And so we've seen a huge increase in attention to firms, particularly say within the KYC, AML area, digital signatures, digital onboarding, things like digital board meetings as well, right? Because nobody can have a physical board meeting at the moment. You can't get everyone in the room. So there is increased and quite rapid interest in these kind of solutions by the banking sector. But yes, I mean, consolidation is bound to happen. The European Union has kind of set a precedent for that. I mean, a few months ago, it might have passed a little bit under the radar, but there were some changes to European laws that are now allow cross-border mergers within the financial services sector to be significantly easier. And those have been rumored for a while, SocGen and I think it was Intesa Sao Paulo, right? I mean, there's the old boys club, I think you might be aware of, the four guys that all went to school together, that run SocGen, Intesa, Deutsche, and the guy that used to run Credit Suisse, were all classmates together, right?
And probably related to Queen Victoria at some point.
Yeah. The old boys club still operates. So there is rumors of pretty large mergers occurring at some point.
Well, there's no doubt that I think you're right. Consolidation is coming, and it sounds like Luxembourg is going to be well positioned for that, regardless of whatever the outcome is. So, Nasir Zubairi from LHoFT Foundation, thanks for joining us today.
And back with us again in the co-host seat is our frequent contributor, Lindsay Davis, the Director of Insights at Caliber Corporate Advisors. Lindsay, you suggested this show and this particular guest, and I have found her absolutely fascinating, and the story of UNest absolutely fascinating and something near and dear to my heart. But I'm glad you're the one who suggested it. Can you maybe tell the backstory?
Absolutely. The future of education and children and how parents are going to afford that has been in flux. If we look at what's happening with student debt, it impacts 34 million consumers, and there's $1.67 trillion. And the pandemic was really an opportunity for the company like UNest to step up and help parents think through, what could they do to better prepare for their children's financial futures. So when we got the opportunity to work together, they wanted to conduct a market study to see how parents were really taking stock in what was important. And if the pandemic had accelerated that desire, which we will get into, but was one of the things that we noticed from parents during the pandemic. And their desire to save for their children's future has increased, but there's still a big gap in the ability to service that. And that's why I wanted to have Ksenia part of the show, because she can speak to what happened with the product, how they've been able to engage their community of parents, and what they're building next.
So, Ksenia, tell us the story of UNest. And by way of background, Ksenia Yudina is the founder and CEO of UNest, a mobile app that makes it easy for families to save for their kids' future. And impressive background coming from the investment space, recently named 40 Under 40 by Investment News. How did you come up with the idea of UNest? What drove you in this direction?
Sure. It was an interesting combination of my personal and professional experience. So first of all, I myself graduated from UCLA Anderson with $180,000 in student debt, and a lot of my friends got impacted. One of my closest friends just graduated from USC to become a dentist with $500,000 in student debt. So that's an issue that I feel is affecting a lot of families and a lot of my friends, and like our generation. And on the other hand, I spent the last 4 years before founding UNest working at Capital Group, which is the largest provider of 529 plans, the college savings plans in the nation. And I was vice president working with high net worth individuals, helping families with their financial planning, with asset allocation, with like all things, to help save for their children. And I just realized that existing solutions available to parents are extremely confusing, time-consuming, and expensive. And for the most part, only people have access to financial advisors, which is not that many people have an opportunity to save for their children's future. On the other hand, this is definitely a priority for parents, and we can talk a little bit about research that we've done with Harris to prove that point. But that was the inspiration, my personal experience graduated with student debt, and also my professional experience working at Capital Group.
So let's talk about this study done with Harris. There's some fascinating data in there that I think we can pick apart. Who had the idea to set up this survey to think specifically about the change that COVID could cause? Because that was counterintuitive to me, that a COVID, that when there's so many other distractions going on, like massive unemployment, global pandemic and health scare, that college was still on the mind, and some of the data around that.
Part of that was why Ksenia and the team came to me. So my background, of course, is in data analytics and research. And one of the first things I wanted to talk through was, why did parents come to UNest in the first place? So I wanted to do a poll of our existing base and then use the survey as an opportunity to find the market that we already are identifying with, and tease out some of the things that matter most. And some of the things that we learned from that study are, the majority of the parents on UNest platform felt more confident about their ability to afford their children's financial future. And so from there, I wondered then, what's happening during the pandemic when most people are feeling insecure about their finances because maybe they're dealing with unemployment, or the markets are so volatile. And we saw a massive uptick in some of the consumer fintech apps during this period of time, because many wanted to get in on the volatility, whether that was from a brokerage perspective or an AUM perspective. So my thought there was, if children really are the most important savings and investment goal, then that's probably going to have a similar impact here, with a lot less saturation, frankly.
Interesting. And so were you surprised that it was the parents of young children, not even the ones that are approaching college, were the ones that responded so strongly?
Yeah, I was pleasantly surprised. It really shows that the younger generation are caring about their children's futures while they're younger, which was not necessarily intuitive, because Millennials and Gen Z, they get a bad rap for not thinking, 2 and 3 moves ahead. But when it comes to children, and that's something that Ksenia had helped me understand from, the initial users that they had, were that parents cared very deeply about saving for their kids, especially young ones, like young parents with kids, which we identify as 17 or younger. So when we say young children, that's what we mean.
Yeah. Insert joke about millennials and avocado toast here. So, Ksenia, you're even closer to this. Were you surprised by the results, or which data, shocked you?
I wasn't surprised about, parents prioritizing kids over retirement, for example, because what's interesting, that's exactly what I observed working in the industry, that conventional wisdom tells us that people need to save for their retirement before kids. And I always personally disagreed with that statement, because I believe, first of all, emotionally, parents feel like very deeply, securing the kids' financial future first. And we have enough time after kids go to college to save for our own retirement. And we can always postpone retirement, but we cannot postpone kids' future. So that wasn't a surprise. And the study showed that parents of young kids select 44% of parents of young kids select saving for their children as a primary priority, and only 18% select saving for retirement as a priority, which was totally in line with my thinking. What was interesting to me was a difference between moms and dads, just difference in gender, and how confident dads are about being able to afford college compared to moms.
Yes, I found that very curious, in that the men said that they are extremely confident in their ability to pay for college, which I don't know that if I were to poll my friends, many would feel that same sense of confidence.
Right. Yeah, and maybe it just has something to do with gender difference, that men tend to be a little more confident, in generally than women. But what was interesting definitely is that 53% of parents said that during the pandemic, the desire to save for the kids' future, increased, right? But I think that we can also kind of justify it with the fact that parents just feel more kind of inclined to save for the kids during the time of uncertainty.
Yes. So let's talk about, from the UNest perspective, and how you go about helping solve this. I'm curious if you have any data or insight on, do men and women actually use the application differently?
Yes, actually, we do have some data and some interesting observations. When we started business, we thought that moms actually will be our primary customers, just because usually, women control, money, and they also kind of oversee kids in the family. But what was interesting is that dads were actually our best kind of early adopters, right? And they feel kind of more confident creating the account. They start with larger contributions. They do not close the accounts. They kind of stick with the plan. And I think, kind of the way to explain that is that men usually just feel a little more confident about investing and finance in general.
Can you speak to, some of the things that we also observed around moms and dads around flexibility, and what did moms prefer in the investment accounts versus what dads prefer? And that's a pretty good segue for what you're building next too.
Yes, absolutely. So first of all, what was interesting from UNest perspective is that during the pandemic, we started getting a lot of feedback from our users that they want more flexibility in what they save and invest for. So they said, look, we don't want to save just for college. What happens if all education transitions online and all tuition so high, maybe it's unsustainable. We want to be able to save for our children, but for things like their first car, or the wedding date, or the first house. So we want that flexibility. What we decided to do is to launch the new account type that's different from 529 and has actually much more flexibility, but also the tax advantages and no penalties on early withdrawals. The account's called UTMA. And during our study, that was one of the things we wanted to find out, how actually people, moms versus dads, treat the tax treatment versus flexibility.
Yeah.
And what the study showed is that moms prefer flexibility most. So 37% of moms said that they prefer flexibility. And that's more than dads. Only 24% of dads prefer more flexibility. But dads prefer tax-free kind of advantage the most. 42% of dads said that tax-free is very important to them, compared to 21% of moms.
Yeah, I was a little bit taken aback about just how far that gap is between those preferences, right there. And does go to show what you expect versus what the research eventually tells you can be, so different. Is there a way that you've been able to help address that within the application?
Yes, that's why we launched this new type of account just, a week ago, and it's in the market. And basically, yes, that's exactly what the account is helping to do. It's also tax advantaged, but it has much more flexibility compared to traditional 529 account. So that was a reaction to the user feedback.
Yeah. How do you actually educate people on that, though? I mean, because I wonder if a lot of the users, unless you had asked me directly, I don't know that I would have said I ever thought about it when I think of funding our girls' education. The flexibility versus the fixed account, and now I'm second guessing myself. I'm like, why did I make that choice? How did I end up there?
You wouldn't be alone there. So we actually did poll people broadly about this, and we found that 1 in 3 parents feel very confident or extremely familiar with 529. So there's still a wide education gap to go, and it's something that's on the product roadmap for UNest, but it's a big opportunity, and her background positions her really well to go after that because she understands it, having worked on both sides of it. But it is extremely complicated. It's a state-by-state process, and the flexibility versus the tax advantages aren't well understood, and they're often not realized until a couple of years down the road. And now that education's in flux, online education probably being a permanent fixture. I mean, it was for me, at least when I was in college. I spent the majority of those massive business school classes in my dorm room, but the idea of paying full freight for that just doesn't fly anymore.
Yeah. What is the reaction in the market been to the product?
It's awesome.
Yeah, no, the product is very successful. And I believe actually that one of the reasons it is so successful is because people do not know enough, right, about the differences between different account types. It's so complex, and we make it extremely easy. So simple. Like, our whole positioning in the market is that we make it very simple and easy for people to start saving for their kids' future. And that's such a big emotional kind of, hook right there, right? That's exactly how people think. And there is nothing else that exists in the industry that would make the process so simple and intuitive and affordable.
So what is the biggest set of mistakes that you've seen people make as they're planning for that financial future, the retirement versus the save for college? And I'm really interested in, what are kind of the overt mistakes versus, the much more below the surface ones that we can help try and correct?
I think the biggest mistake that people make is not saving at all, right? Because what's interesting is that a lot of parents have the right intention. Like, I talked to a lot of my friends, even when I was at Capital Group, and they reached out to me with the question how we can start saving and set up the account. But the process was so complex that a lot of them gave up without even starting, right? And that's the problem and kind of mistake we're trying to solve, making it not only simple, but creating very low barrier to entry that people can start saving with just $25 a month, right? Like, a small, consistent, disciplined investment can make a huge difference over time and can help, their kids to go to college tax-free.
And this is
tax-free.
In a tax optimized way.
Tax optimized way. But this is historically one of the challenges, right? Where the time to pay off is so far in the future, and those small incremental steps just don't feel like they're going to add up to enough. And it becomes easier and easier to say, well, I'll start that tomorrow, or I'll start that, next year. Getting people on track and that level of discipline, I think, is pretty important. Have you measured any of your users? Do they stay on track? And like you'd mentioned, the men are more likely to, once they've set the plan, stay on the plan.
Yeah, and we encourage all of our families to set up that monthly plan. We use a very simple college calculator in the app to help them estimate the goal and estimate the monthly investment and kind of get, be committed to it. But they can also go back in the app at any time and make additional deposits. And what's also interesting about our future plans is that by the end of this year, we're planning to release the gifting feature. that would help parents receive gifts from grandparents, friends, other family members directly into the child's account. So they're not feeling like they're doing it alone, and they can involve the entire community to help them save for their kids.
Well, you've just ruined the holidays for my nieces and nephew, because I know what they're getting for every holiday and birthday from now on.
Contribution to a college savings account.
Yeah, please add emoji functionality.
Which was a preference. We actually did ask this question as well. We gave parents the option. I mean, we gave all Americans that option, but for parents, 47% of them, which was the lead among all of our options against, gift cards, Zelle, Square Cash, clothes, toys, contribution to a college savings account really was among the top preferences.
Do you think that is something that changed in a post-COVID world where there's a lot more insecurity and concern about some of these expenses and ability to finance things?
I believe actually that during the pandemic world or post-pandemic world, most of the gifts will transition to digital, right? Which is a trend that we're already observing. Even that right now, a lot of people do not have opportunity to meet for the holidays, to meet in person, to come and have a huge birthday party. So how can you still contribute to the child's future? How can we still gift to the child? So I believe, everything will be moving into digital.
And how do you think that trend to digital ultimately, plays out, right? Because the whole world, even our in-person education, has now become, part of the digital. Are there more tools, and how do you envision that network you talked about, engaging grandma and grandpa and uncle to participate in this? It takes a community these days to send a child to college. What other tools are on your roadmap, or do you see any other tools that are doing a great job in this planning and preparation?
Yeah, I believe gifting will be the big one for now, because it takes time to build the entire infrastructure and make it very simple. But our goal is just to simplify the process as much as possible. So it takes you just one click to send that gift link to your friend's family, and they can contribute for any occasion.
Yeah, I think, if we're being creative, one of the things that other fintech companies have been able to do is blend the digital and the physical experience, whether it's investing and giving a fractional piece of something, like a piece of memorabilia. 529 has never had that, versus when you buy a stock, you can send a copy, because most of those live in my former employer's vault at DTCC, but you wouldn't send a copy of a 529 certificate. So how can we create that? That could be something very interesting to, again, give the kid the ability to open something up under the tree. Okay, yes, he's my future, but I don't know what it's worth yet. So there's ways to be creative here. And I don't think that any, incumbent is thinking about this in a holistic and meaningful way yet. And that's what the fintech.
I think you're spot on with the tangibility piece of it. Is that has to be part of the equation to reinforce, right? Again, because the payoff is so far in the future. And, when you're young, I don't want to put words in anyone's mouth, but I'm guessing day one of going to college, how you felt about your college debt was very different than, graduation day and the first bill that arrived, and how you feel about college debt. And one of the other things, though, that I do like on the virtual side of it, though, is our ability to add more around the behavioral economics and to track what people are doing. And I don't want to say manipulate, but I'll just say shift, and maybe protect them from themselves in, what they're doing just continues to go up.
Right. And as UNest builds, they'll have that data. They'll be able to say, look at our parents 5 and 10 and 15 years down the road. And that tangible investment becomes real when you see the first UNest kids go to college. And I think that's going to be really exciting.
Yeah.
So, go ahead, Ksenia.
I think there is a way for technology to help to instill those good habits in people's behavior, right? If you haven't been saving or you haven't been saving enough, technology can actually help you to estimate the right goal and, make sure that you stand on track with that goal. And another thing that you can achieve with moving into this digital world is educate people on the scalable level, right? Through technology or social media or emails, and just, help with the whole financial literacy aspect. You can involve your kids into the savings. You can help them to learn about investing. You can help them to learn about money early on.
Yeah. I'm curious, what are your other favorite finance apps? Because like you're obviously a great student of the space and spent a lot of time thinking about the educational side. What's in your virtual wallet of finance tricks?
My latest favorite is Greenlight. That also kind of falls into our space, but it helps parents manage expenses for their kids, manage allowances. So I would say that, I'm a big fan of the company, of the team, and what they've invented and how they're helping parents.
How about you, Lindsay? I think you have one of every application out there.
I have a lot. It's really embarrassing. I have like 180 some odd connections through Plaid. You can do a self-audit. I try everything. And some of the things I like are, the frictionless finance that we've discussed, the ability to make investments in things that I'd otherwise not have had access to. I mean, the SPAC craze is started to reach a fever pitch, but you could always invest in Chamath's IPOA on Robinhood. Now the Charles Schwab has gone to zero, having optionality and the ability to sort of hedge against and get access to financial, papers and the content that they put on the platform. So you can get equity research reports. I think that there's a massive gap in education still. So companies that can help people read and apply those things. There's a lot of new newsletters coming out that are dedicated to that. So I'm excited to see some of these things, bring it all back together. I think that's truly what's missing. We've unbundled, financial services. Now we need to actually rebundle them holistically around how I want to invest and save. Like I don't have a child today, but I have a niece, and having a 529 contribution to at least take advantage of tax optimization would be surreal if my, financial life knew all the ways in which I was delving up my money.
Well, and I think that is the part that we can't just rebundle back to what we were. The neobanks that are like, hey, we just started as, we were, your deposit account, and then we added savings, then we tacked on, and it's like, okay, you're just a prettier version of what I already had. No, by the way, the best banks have all caught up. How do we rebundle in a way that takes advantage of something like a UNest?
Well, yeah. And to that point, Greenlight, having been a neobank targeting children first, going D2C, now works with Wells Fargo and JP Morgan to support their child savings accounts. So they catch up by partnering after, failing to build first, though, on some fronts. But that's for another podcast.
That is another entire episode on, is the fast follower a fallacy or a viable strategy, for the banks. So if someone wants to learn more about UNest, Ksenia, where should they go to learn about you, and what suggested reading do you have for all of those new parents that are highly concerned about their young children's education?
Yeah, they can go to our website, unest.co, and we have ton of blogs, a lot of educational materials posted on the website in our resources section, or they can go into the App Store or Google Play and download the app on the iPhone or Android.
Fantastic. So, Lindsay, thank you for joining us as well. Look forward to that next debate on the fast follower. Ksenia, fantastic to have you, and thanks for making it easier for all of us parents out there to save for college.
Thank you so much for having us.
Thanks for having us, Jason. Talk to you soon.
That's it for this week. If you like the show, make sure to give us a 5-star rating on your favorite podcast platform, or share it with a friend, or share it on social media.
We'll see you again next week with more Breaking Banks.